The market, where everyone's convinced they're a genius, right up until they're not. In the arena of trading, the fiercest opponent isn't the Nasdaq or the Dow. It's that little voice in your head whispering things like, just one more trade, or trust your gut. You totally know where this is going. Today, we're diving into the tricky, twisty realm of human emotions, instincts, and all those mind games that can make or break your trading journey. But don't worry, we're not about to hit you with textbook definitions and dull theories. You might even catch a glimpse of your own trading style somewhere in these tales, whether that's a good thing or, well, let's see, shall we? The paper trader hero. Tom loved to talk about his trading success, especially since he perfected his strategies in a way few others had, even though he has never risked a single dollar. Tom was a paper trading legend, a master of simulated wins. You've got to risk it to get the biscuit, he'd joke to his friends, while quietly racking up imaginary profits. One day, after 6 straight weeks of paper trading wins, he decided it was time to take on the real market. He had his charts, his strategies, and his foolproof system. Confident, he funded his account and placed his first real trade with the swagger of a seasoned pro. It took exactly 10 minutes for Tom to lose half his investment. Panicked, he tried another trade to make it back, only to lose even more. Reality hit fast. His perfect strategy wasn't as foolproof as he'd thought. Tom closed his account for the day and decided to take a break from being the paper trading hero, realizing that trading the market was a beast best handled with real experience. In trading, Tom learned there are no biscuits without a few burns first. The FOMO frenzy. Mark was a veteran trader of a whole 3 months, and if he knew one thing, it was that he would not miss out. He'd heard the legendary stories. The guy who turned $150 to $150 million in a year, the crypto that shot up overnight. So, naturally, when he saw a particular cryptocurrency skyrocketing, he couldn't resist. He logged in, saw the graph shooting up, and his heart raced. "This is it," he muttered, wiping a bit of nervous sweat. The chart looked like a roller coaster going up, and in his mind, it wasn't coming down anytime soon. He hit buy with gusto and imagined all the ways he'd spend his profits. Couple of days later, the crypto did what cryptos do. It started dipping. No big deal, Mark reassured himself. Just a small correction. But the price kept dropping. Panic set in. Had everyone known to sell except him? In desperation, he hit sell at a loss, thinking he'd learned his lesson, until he saw the price reverse and shoot back up. And just like that, he was on a first-name basis with fear of missing out. In a huff, he closed his laptop, vowing he'd learned something critical. FOMO isn't just a trading term, it's a rite of passage. The revenge trade tango. Emmy was calm and collected, except when she wasn't. After a particularly brutal losing streak, she decided she wasn't just going to take the loss lying down. Oh no, she was going to get her money back. She opened her account, stared at the screen like it had personally wronged her, and hit buy on the first forex pair she saw. It didn't matter if it was a sensible choice. This was about winning. But of course, the market was oblivious to Emmy's vendetta, and the price began to slip. "All right, fine," she muttered, determined to recover by any means necessary. She tried another pair. Another loss. Another trade. Bigger loss. By the end of the day, she tangoed with every bad trade possible, her account balance looking like the punchline of a bad joke. And all the while, she couldn't shake the feeling the market was laughing at her too. Lesson learned. In trading, revenge isn't sweet. It's expensive, very expensive. The almost there trade. Trump had a knack for drama, and his trading style was no different. He loved the thrill of a big win, so he'd often ignore all the advice on risk management. In his eyes, those were just unnecessary limits holding him back from the jackpot. Big wins needed big risks, right? One morning, Trump spotted what he believed was the perfect stock setup. He studied the charts, convinced this was the one, the golden trade he'd been waiting for. So, naturally, he went all in, putting his entire account on the line. He set a take-profit level a little above its current price, just enough to cash out big, but not too greedy. This is it, he thought, already imagining the celebration, the bragging rights, the thrill of watching it all unfold by evening. And to his thrill, the stock started climbing. He watched as the price inched closer to his take-profit level, his heart racing. Just a few more ticks. Almost there. Just a little bit more. He could practically feel the windfall in his hands. But then, just a hair's breadth from his target, the price stalled. For one brief, agonizing moment, it hovered, before starting to drift downward. Trump tried to stay calm, reasoning it was just a small pullback. But the pullback became a drop, the drop became a plunge, and his paper profits evaporated in seconds. Soon, his entire investment was sinking fast. Panicked, he considered holding on, hoping for a bounce back. But the stock just kept falling. His all-in decision was costing him dearly. Instead of the jackpot he'd imagined, he was left staring at a near-empty account. In the silence that followed, Trump realized his mistake. Risk management wasn't about limiting his wins. It was about giving himself a safety net, so he wouldn't lose everything on a single trade. Next time, he promised himself, he'd take profit when he could, and leave the thrill-seeking for the amusement parks. What is trading psychology really all about? Trading psychology is like having an argument with yourself and losing every time. It is the ultimate test of keeping a cool head, but when you're watching an asset spike and drop, it's more like trying to keep a cool head while juggling chainsaws. First, we've got FOMO, fear of missing out. It's the friend who convinces you that this crypto is about to go to the moon, and you'd be a fool to miss it. But in reality, FOMO is that irrational little voice that sees price shooting up and shouts, "Buy now," or miss your chance at riches. You hit buy and sit back, waiting to watch your capital grow, only to see it take a nosedive, as if it was just waiting for you to invest before it could crash. And that's how FOMO welcomes you to trading. Then there's revenge trading. Imagine losing on a trade and thinking, "All right, market, you and me. I'm taking this personally now." You convince yourself you're going to get back what you lost. So, what do? You jump into a trade, any trade, because clearly this is your comeback. Except, well, the market doesn't know it's your comeback. The market doesn't know or care who you are, so you end up deeper in the hole. Revenge trading is basically the ultimate lesson that trying to win back your losses is the trading equivalent of throwing a tantrum, and it's just as productive. There is overconfidence, the trap that gets even the best of us. Imagine being a paper trading hero. You've made countless imaginary trades that all work out. You're on a hot streak, so you decide to go live. First real trade-in, with almost all of your trading bank, and few weeks in, you've managed to lose all your capital. Turns out, all that confidence you built on your simulated gains doesn't translate so well when real money is on the line. Overconfidence in trading is like wearing sunglasses in the dark. You think you look cool, but you're just bumping into walls. So, what's trading psychology all about? It's about learning to dodge these traps. It's understanding that the market has no secrets, and success isn't about making every trade a win. It's about mastering the urge to act on impulse, managing that fear, and taming that ego. In the end, the best traders are the ones who aren't just technically skilled. They're emotionally resilient. They've learned that sometimes the smartest move is to step back, watch, and keep a sense of humor about it all. Because if you don't, the market will happily laugh at you instead. If you found this video helpful, I will recommend you also watch this video. I discuss 10 brutal truths about trading psychology that most people only realize after years of suffering painful losses. Trust me, it will help you. Please don't forget to like, share, and subscribe for more videos like this in the future. Thanks for watching.